Every single data point you look at points to the K-shaped economy, and it totally explains why you have all of these consumer surveys delivering very bleak results, but the market keeps going up and the economy is doing just fine. So those that get by paycheck to paycheck are really struggling. President Trump reminding us that everything is just great. Rich have better information, they have better access, and they get wealthier because they have access to opportunities us mere mortals don't have. Crypto is a leveler for all of that. Bitcoin is the only new technology that anyone can get in any days on anywhere in the world, whoever you are. We can't say that with pretty much any other assets. One of the most disturbing trends I've seen recently has been the increasing use of weaponization of the dollar system. Russia is getting ready to launch their CBDC because they've been cut off from the dollar system. It's going to give them a resilience. So that is one of the reasons that crypto is now marching into the geopolitical sphere. Why this makes me particularly bullish. Bull markets are always driven by new money coming in. Always. Bull market needs new money coming in. And you have now two choices.
Welcome back, ladies and gentlemen, to the All In Crypto podcast. I am your host, Rupert Pickering, and today I am delighted and excited to be introducing Noelle Acheson, one of the sharpest macro voices in crypto. She writes the Crypto is Macro Now newsletter, and she's previously led market insights at Genesis and served as head of research at CoinDesk. Noelle's work sits right at the intersection of global macro, market structure, and crypto adoption. And she's brilliant at cutting through narratives to what actually matters. Noelle, welcome to the show.
Rupert, that was the most amazing introduction. Thank you very much.
You deserve it, honestly, and I'm very excited to have this conversation. Now, you have your newsletter, Crypto is Macro Now. I think that's where I want to start because crypto's kind of existed in its own environment. Perhaps there's always been a correlation there with the macro, but now it seems ever tethered to it. Why do you believe crypto is now part of the macro?
I love that you identify the evolution of the relationship there. When I got back into crypto, which was, I just came across Bitcoin in 2014, it was totally separate. That's one of the reasons I fell in love with the idea. And for many years, many of us toiling in the mines, as it were, it was very much its own thing, the alternative, that is, after all, what it was created for originally. But a few years ago, I started realizing that not only is macro influencing crypto a lot, but crypto is going to influence macro. And that's why I started this newsletter back in 22 now, because not enough attention was being paid to how crypto will influence macro. And over the past 3 years, I have to say it's developed much faster than even myself, the eternal optimist on this front, expected. But to answer your question, crypto is macro basically on three different levels. I mean, one is markets. Obviously, I was covering for years, at CoinDesk and then at Genesis, how macro was influencing crypto markets. A lot of attention on what the rate expectations were, a lot of attention on all the economic data, because macro investors were stepping into the market. And this was bringing in liquidity, which brought in more investors. It was a very virtuous cycle, but macro was influencing crypto. Then things progressed. We started to see crypto influence macro with allocations to risk assets in portfolios changing, et cetera, et cetera. Markets is one. The other is monetary and fiscal policy. We're seeing crypto influence that, not so much through Bitcoin, although we do have the reserve asset question with central banks interested in not only increasing their gold holdings, as we've seen reflected in the price, but also we know some central banks are looking at Bitcoin as a potential alternative reserve as well. But more so on stablecoins. The whole stablecoin story we can get into, we have time, but that is a fundamental shift in the monetary versus fiscal policy balance that administrations have been battling with and that investors still, in my opinion, don't understand. And then The third would be geopolitics. Crypto is a material feature in the shifting geopolitical landscape. Things are turbulent out there, as we all know, and crypto is a new tool in the box that confers resilience where it is needed. Resilience not just for individuals who may be protesting and get debanked as a result, but also resilience for entire nations, especially in a world in which we're seeing financial systems increasingly weaponized. So I'm not sure if that answered your question, but the crypto is macro now is a massive field, and we're seeing it gallop away from us even in terms of relevance.
Big question. You answered it beautifully. And you broke it down into sort of three different ways in which it's becoming part of the macro landscape. I perhaps want to get into all three of these in a little bit more detail. The second one really interests me because it seems like crypto that spawned out of obscurity is now perhaps the answer to perhaps fiscal challenges being mentioned by the likes of Besant as actually helping the United States with some of their fiscal challenges. So we will get to two and of course three, which is a big one. The first one you mentioned was how it's increasingly changing as a market, and we're seeing that traditional financial elk moving into the cryptocurrency space. Maybe we could flesh out number one in regards to how you think crypto is becoming macro from a market perspective.
The biggest impact is obviously the end of the 4-year cycle. Because we are now a relatively large market, especially compared to a few years ago, and because there are macro investors that can move the price according to very different considerations than, say, crypto native investors would be looking at, it's a macro, we have to take macro considerations into account. Now, there are many threads we can pull on from here, many vectors we can take this. One is the attention on the macro environment, and I do focus on that, although these days it feels very much like banging your head against a wall. But rate considerations, liquidity has been coming down for the past few years, and the Chicago Fed's liquidity index shows that the financial conditions are their loosest now, Rupert, since 2021. This is even before the Fed started hiking rates, and yet we are still with a Bitcoin price that is slightly below where it was this time last year. And that shows that the macro tailwinds are stronger than they've ever been, but Bitcoin is still not responding. Before I extrapolate onto why I think that is and why macro considerations drive the price, but it's not everything that's driving the price, we should talk about how macro investors see Bitcoin and why there's so much attention from all of us on rates expectations. Bitcoin, I've often argued that Bitcoin is the most sensitive liquid asset in markets today to liquidity sentiment, because it is the only truly liquid asset that is not influenced by cash flows or even corporate decisions that could affect its outlook, unlike some high growth equities, for instance. So when you hear the term risk asset, that's a pretty big bucket, but most of the assets in that bucket have other things going for them than liquidity sentiment. Bitcoin is a pure barometer of liquidity sentiment. And while liquidity sentiment has actually, it's been good over the past year, Bitcoin has not responded. So this brings us away from the macro influence to the market to the vestiges of the crypto influence. It's good to hear that it hasn't totally gone away, although it's not a happy tale. We're seeing structural issues, a rotation. I like to call it, 2025 was the year of the Bitcoin rotation. And I'm not talking about rotating from Bitcoin into other assets. I'm talking about the rotation from the old time holders into the new holders. The old time holders, and I consider myself one. I bought my first Bitcoin in 2014. I went along to an ATM not far from where I live, put my 50 euro note into the machine and got my first Bitcoin back then. But many of us had 100,000 as our sell level, because back then Bitcoin was $250 and 100,000 was just unreal. It was never going to happen. So that was our sort of pie in the sky target. Well, it happened. And so many of us did what we promised we would do, what we promised our families we would do, and we exited. And we've seen a lot of that over the year. It's not just the price, where it was a big like check goal achieved. It was also that Bitcoin isn't what it used to be. Bitcoin was an exciting frontier asset 10 years ago. Today it's not. It's still new, it's still exciting, and especially probably better than anyone, because you spend your days trying to educate people, just how much awareness is still needed. But Bitcoin isn't the frontier asset it used to be. And that's another reason why we've seen a lot of rotation from the old time holders who have a different profile into the new holders who are much more macro focused and more liquidity attuned than the old timers. So that was a roundabout way of explaining why Bitcoin is more macro now than it used to be. And that shift into a more macro mindset is one of the reasons why it hasn't done anything over the past year. The selling pressure will wind its way through. We're seeing signs of that already, but there could still be some time to go still.
So would you say this is more of a kind of shift away from retail, more everyday investors that perhaps caught the trend early, to more of a kind of institutional elk? I mean, when I look on exchange volumes, it's just non-existent. If you look at traditional Bitcoin cycles, you mentioned kind of on-chain data, which we can derive. We can look at sort of the age of holders, the age of wallets, the age of where that Bitcoin has been sat. You can definitely see and back up everything that you're saying there. I guess the one thing that you spoke about, there's a narrative shift. Bitcoin as a kind of frontier asset perhaps has changed for many people. Its concept of being against the institutions now adopted by them perhaps goes into that, and a number of other things. But what's the kind of, if you were to relate a main driver to that, what would you say it is? Just sort of older retail holders moving on, selling because it got to 100K and their partners are looking at them as if to say, look, it's really time now that we got that new car or new house or whatever it may be, to a kind of more institutional elk. Is that really what's going on? Retail to institutions? Is that what we're looking at here? And that's why we're not seeing it on exchanges?
I won't go so far as to say it's retail to institutions. We have to step back a bit. I mean, because you're not wrong, but it's a somewhat different definition. Bitcoin, we'll start with Bitcoin because back then it was the only crypto asset. The only market traded today that started retail and worked up to the institutions. And this is something that few investors today fully appreciate. Most new assets in portfolios start at the institutional level and then they trickle their way down to retail once the regulators are comfortable that the risk has been stamped out of it. Well, Bitcoin was totally different. It started retail, built its way up into institutional. So the original investors, yes, they were retail, they were not institutional, but they weren't your typical mainstream retail. They were technology first, I should say, technology first retail. They were brave, they saw the future. Maybe they were just whatever, it's very inexpensive, let's take a punt, don't think it'll go anywhere. But they saw something in the technology that solved a need that the cypherpunks have been looking for decades, since the 1940s, really, especially since the 70s when the internet became a thing. There has long been a search for a digital alternative to cash. And so the original investors, they weren't institutions, but we can't really equate them with mainstream retail today. They are rotating, as we've been talking about, into more institutional holdings. I would say most of the volume that we've been seeing over the past year is institutional, not all of it. A lot of the ETF buying, for instance, are coming from retails who think, yeah, sure, 5%, why not? I mean, I'm hearing so much about it from that annoying nephew. And then this is not necessarily, though, the end of the retail participation. Bitcoin cycles, I'll say Bitcoin cycles again because it's the largest asset and it's the one that I've been following most closely over the years. They follow a certain pattern. Early in the cycle, you do get the large players, the institutions, let's call them that, they are, and I hate this term, but it's tradition, they're known as the smart money. That is annoyingly condescending, I know, but that's tradition. They're known as the smart money. They get in first, they've done the homework, etc. When the price starts moving and the froth starts accumulating, that's generally when the retail gets in. We used to watch for signs of retail participation in the Bitcoin market as a sign we were heading into the later stages of the cycle and the top was not that far away, because again, condescendingly, they are not regarded as having done their homework. I think that's incorrect, but that's the tradition.
Dumb money, perhaps, I believe. I know you might not want to say it, but dumb money is what they call it, or exit liquidity. These are where we get these kind of terminologies
Yes.
that are thrown all over
Yes.
Twitter
Very
nowadays.
frustrating. And I consider myself a retail investor and back in the day, again, with my 50 euro note. But, I'm a CFA, for heaven's sakes. I'm not exactly dumb money, but still, I'm not rich. So there's that. Now, yeah, where was I on this? Oh, yes. The institutions are dominating at the moment. This has benefits and negatives as well. In other words, the liquidity is, as you pointed out, astonishingly thin. I don't know if you saw the volumes and the price action over the weekend. I was staring at it on Sunday night with my mouth open, thinking, this is insane. It's a little flat line with no volume. Even in a bear market, we didn't really get that. There's a joke going around that Bitcoin is the new stablecoin.
Yeah.
But but it doesn't mean that retail's not going to be coming in. There are new on-ramps appearing every single day practically. And when the price starts moving, I don't think it will just yet, there's more sell overhang to work through. But when it does, then we will see a different type of retail investor, the more mainstream retail investor. Certainly the speculators will be back in, but also, the mon-pa who just want a little bit of hedging, especially given the geopolitical turmoil. So that's a complex answer to what was originally a simple question, but the profiles have changed, I think, is the big takeaway.
Yeah, I absolutely love that. And that would perhaps suggest that, there's brighter days ahead for Bitcoin. It's entering a new kind of phase in regards to maturity. It's very interesting. I read a book from Roger Ver, and he wrote a book called Hijacking Bitcoin, which I thought was brilliant. I followed Roger from his early days. We both do jiu-jitsu, so I liked him for that original aspect, and then followed him into the cryptocurrency space. But he spoke about how Bitcoin had kind of taken a different turn in regards to what perhaps the libertarians wanted. And I think it's brilliant that you can kind of recognize that through on-chain volume, and there's a kind of shift happening in regards to the underlying principles of Bitcoin driving that, or the use of it. There's a kind of narrative change to it going on. And then in regards to this market maturity, you could perhaps call it, it's interesting where we are. Institutions are now it's more institutionally led right now, but that doesn't mean that retail isn't here. That just means they're not here yet, which could, uh,
Exactly,
yes,
exactly. And on that point, to see the CEO of BlackRock up there
yeah,
talking about what a good store of value, that's a pinch me moment, right? But, and again, Roger Ver is totally correct. It has become something the original libertarians didn't expect it to become. And again, this is drowned out in the narrative that we see march across our screens these days. It is still that. A big overlooked feature of Bitcoin is that I used to drive people mad early in the days when they'd say, "What is Bitcoin?" And I would say, "It's whatever you want it to be." And it is still today, whatever you want it to be. It's an institutional asset, yes. It is also a libertarian tool if you want it to be that. If you want it to be a store of value, it's a store of value. If you want it to be a high volatility speculation asset, then it's that. It's whatever you want it to be. And the reason it is that, the reason it has that flexibility is that there's no one to decide what it is. I bristle when I hear BlackRock try and convince everyone that it is a store of value and only that. And think, who are they to decide what it is? I personally have a small amount of Bitcoin that I hold because I see it as a new technology. For me, it's not so much the store of value thesis, although I believe that. It's not the speculation asset because I'm just not that profile, being a terrible trader. But for me, it's a new technology, and I do believe its utility will evolve over years. I believe it's undervalued at the moment for that reason. But again, I see it as a new technology. It is that too. It is whatever people want to see in it. So it hasn't left the libertarian ideals. The libertarians can choose to ignore the on ramps if they so wish. They can choose to self custody, cold storage, whatever. There are the tools for them to do that. And they will find other like minded people doing the same. But if you want the safety of the institutions, you get that too. That's the big change.
Yeah, no, absolutely fascinating. And do you think, what we see? I know JP Morgan put out a piece talking about how Bitcoin is becoming exactly what you talk about, a macro kind of driven asset, and crypto more broadly. Um, where do you think we are in regards to institutional adoption of Bitcoin in the crypto space more broadly? It kind of feels like we're still at those first innings, because I know in the traditional financial world, it often doesn't pay you to be first. They'll often let other people go first, and then with the might that they have, come in after. Feels like we've still got them to come in a big way. We've still got retail to sort of come back in, perhaps, or a different elk, a more Main Street elk of retail to come back in. Where do you think we are in regards to kind of adoption of this technology from an investment point of view?
I love that you bring that up because that is one of the reasons I am still very, very bullish on Bitcoin, despite the sell overhangs, despite the disappointment, etc. Now, to answer your question before I extrapolate into why that makes me so bullish, and that is we are again maturing. The headlines, the BlackRocks, the Morgan Stanleys, the JP Morgans even will make it sound like all of the institutions are here and that Bitcoin is now institutional, full stop. The latest Bank of America fund manager survey that I saw has 7% of respondents holding some exposure to crypto. Seven, single digits still. So that highlights just how early we are, despite the impression the headlines give us. They're not here yet. To again pull out yet another condescending phrase from traditional finance, traditional institutional, I was going to say professional, but that's not fair. Institutional investors are herd animals. None of them want to go first, but they want to be fast followers. And again, this is condescending, and there are plenty of exceptions, but generally they do move as a pack. 7% shows that they're not even really paying attention to it yet. We know that's changing. We know the education is going on. There are many institutions doing an excellent job in actually walking into the boardrooms and giving presentations. At least they're getting the door open to them now, and people are listening. In the classes that I teach, I get a lot of questions from the professionals who just 2 years ago thought this was a fad that was going to disappear. They now want to know more. So we're seeing that happen, but 7%, single digits, it's not. Now, onto why this makes me particularly bullish. Bull markets are always driven by new money coming in. Always. Bull market needs new money coming in. And you have now two choices. You have equities or you have Bitcoin. In which of those assets is there more new money poised to come in? And that is obviously Bitcoin, because who doesn't hold equities, right? Who doesn't hold an AI exposure at this particular point in time? Who doesn't hold growth stocks? Who doesn't hold some cyclicals? Pretty much everyone has exposure to equity. So where's the new money going to come from? Whereas with Bitcoin, that's a much easier question to answer. Where's the new money coming from? Well, everyone.
And what do you think more broadly? We've kind of, crypto is a bit of an esoteric phrase, I think. There's an entire industry that underpins it. It's like saying the stock market. There's lots of different aspects to the stock market and lots of different things that those stocks enable in regards to the companies behind them. I think crypto is the same, but there's a immaturity in regards to the recognition of that. When people talk crypto, they really just mean Bitcoin. I don't think that for us, we perhaps understand the breadth in this market, but for the masses, they really don't. What do you think about kind of altcoins? Perhaps a condescending phrase. I mean, it's factually correct, right? Alternative coins to Bitcoin. What do you think about the altcoin market? I mean, that seems to be significantly further back than Bitcoin. We can see that just from only now getting ETFs around the likes of XRP, Solana, so on and so forth. What's your general take on the altcoin space from a market point of view?
I am bullish on most of them for two reasons. One, the on ramps, you mentioned the ETFs, but again, Rupert, we don't really even have, except for two exceptions now, ETH ETFs that distribute staking rewards. Grayscale and Morgan Stanley, their ETF filing for ETH is going to distribute staking. So we're still really, really early on that. A lot of the I don't want to say prejudice, I'll say the reason why they are largely being ignored by investors is one, they're paying the price for the froth in previous cycles. And two, there's still so much more education that needs to be done on those. You thought Bitcoin was complicated? Wait till someone tries to explain to you the fundamentals underpinning AVA or Compound or any of the others. I mean, it's just a whole different level. So, baby steps on that. But I'm bullish because the on ramps, the education is being done and the on ramps are being built. And the second reason is the Clarity Act. I mean, let's face it, Bitcoin is not going to be affected at all by the regulation coming through in the United States, the largest financial market in the world. Bitcoin is a commodity. That's never really been up for debate, and Bitcoin was the gateway asset. In other words, Bitcoin is the sort of, that's done. But if there are DeFi protections in the Clarity, we'll find out in probably sometime today whether the drafts that are going to be marked up on Thursday will have that. If there are DeFi protections and if there is greater clarity over the taxonomy and how they can interact with traditional finance, etc., well, that's a whole different ballgame. I personally expect to see banks harnessing decentralized lending protocols, especially the whitelisted ones, in coming years. So it's a slower burn, but I am very optimistic on the altcoins. The problem is working through the resentment from the froth in previous cycles and also just furthering the education. But again, you mentioned that crypto is too broad an umbrella. Altcoins is too broad an umbrella because altcoin does include many revenue generating protocols, revenue generating tokens that have fundamentals you can actually use to value them should you decide to do so. It also tends to include meme coins, which are a very different beast. And where in all of this taxonomy that we're throwing around would you include stablecoins, for instance? A lot of the traditional investors that I talk to do still think crypto includes stablecoins. And they find this a bit uncomfortable because crypto is not safe. And so why are we putting stablecoins into banking, for instance? So again, it's narratives maturing, but those of us that work in this industry, we tend to forget just how far yet we have to come.
Yeah, we're in a bit of an echo chamber, I think, often. And we are so early in regards to, I think, a space more broadly. Bitcoin's already changed the world. It's changed my perspective, your perspective. We're here right now as a result of it, and we all owe it a hell of a lot. But I think there is something really fundamental in regards to this technology that is going to change the world. Your second point, which we're going to get onto in regards to kind of stable coins, how this technology is changing monetary policy, this kind of stuff. That's more in the altcoin sector, these kind of underlying rails that are going to solve problems perhaps with the financial system, which is kind of the opposite of what this space spawned out of. And I think it's very interesting. You look at projects like Aave, they literally offer a higher yielding alternative and actually have like insurance and things around it to the traditional banking sector. I mean, that is transformative in the same way that the internet made sending information simply faster, better, more global. This kind of sector has the properties to do the same with value. And I think that's exciting, very exciting. When we talk about markets, how could we sort of not talk about the fact that we've not even been allowed to have a market in the likes of the United States, where all the capital is, or the largest amount of capital, with a complete lack of regulation? It's not that long ago we were battling Gensler, right?
Yes, God, and then to some extent, I mean, a lot has happened since then, but
Yeah.
it does still feel like yesterday because it was so frustrating. I mean, that was a dark period. It
Yeah.
was. So, yeah, but it's been a year and a bit, and just a lot has happened in
Yeah.
that. You're so right to highlight the change in the world's largest financial market. Again, we can't forget that. And not just that, this is something, again, that I think is very overlooked. The pivot of policy support in the United States just, almost a year ago, scrambled jurisdictions everywhere. around the world. And while many jurisdictions were, trotting along, feeling fairly complacent that they were the head of the United States in their embrace of these new technologies, well, suddenly they're way behind now, and they're struggling to catch up. And that matters, especially for some of the Asian economies, for instance, that are very into crypto but don't yet have the legal infrastructure to support institutional involvement in the. Europe is, trying to adjust its rather strange regulations to at least compete with the US market. And I think we'll start to see that, roll around the world. Jurisdictions around the world passing supportive frameworks, not even necessarily for supportive, any kind of frameworks for crypto regulation will make banks more comfortable in offering services like custody, which is an entirely new type of on-ramp, which will help bring in that new wave of money that we were talking about.
Yeah, we talk about adoption. There's so many catalysts, like just how early we are being a major one. The second point that you mention is around kind of the evolution of money, already existing money, fiat money, and the kind of form that it takes in regards to stablecoins. In some countries, CBDCs will be the alternatives, although not all are currently looking to use distributed ledgers. Maybe we could talk about that second point in regards to perhaps crypto driving. I mean, when we talk about markets, we're talking about macro markets coming into crypto. This, your second point, is really an example of kind of crypto actually now driving the macro markets, interest rates through perhaps demand for stable coins and thus the treasuries that back them up. Maybe we could flesh this out a little bit, if that's okay.
Well, thanks for pointing that out, because it is one of the more fascinating aspects of the debate that we're seeing now about whether stablecoins can earn interest, kind of thing. And to highlight why this is so important and why it is so fascinating, why it matters so much for the balance between monetary and fiscal policy and therefore interest rates going forward, we have to step back and remind ourselves what stablecoins are. They are dollar representations on chain backed by treasuries. And that's the key right there. And if you look at it in that light, then Treasury Secretary Scott Bessent's full-throated support for the concept makes a lot of sense. He envisions an industry, a financial sector that is using less fiat and more stable coins. Now we can talk about how much more efficient they are in cross-border transfers, et cetera, et cetera. That's not really the point. The point is that he would like to see a landscape of more stable coins, less fiat. And why is this? Because with fiat, you deposit your money in a bank, and a bank will handle your transfers for you and your investments, etc. With stable coins, you're depositing your money in treasuries. So we have here the transfer of money slash power, if you like, from banks to treasuries, from monetary policy to fiscal policy. That is a fundamental shift in how the US economy has traditionally worked. It has always been part of the game plan. And Scott Bessent was even talking about this before he took office. So we're seeing this play out. It's obviously especially relevant now, given the DOJ subpoena on Chairman Powell. Fed independence is part of this equation. But the end game is not so much taking away Fed independence as making the Fed less relevant. And, recent trends have been making the Fed less relevant anyways. But it is now policy, even though it doesn't carry that particular name. It's the unspoken policy. Stablecoins transfer power from banks to the government via the backing of the money that is being used. And yes, this is going to have a big impact also on money supply growth, et cetera, et cetera. But greater demand for treasuries, what's that going to do to yields? That's going to bring down yields. You bring down yields, you do have more economic activity, and it also should be, hopefully, an ease on some of the bottlenecks on prices, especially in housing, if people are building more houses because there's more demand, because mortgage rates are down, et cetera, et cetera. So we're seeing potentially lower interest rates because of higher demand for treasuries.
Yeah, and if you look at kind of the dollar dominance play, I always pay attention when central bankers like Christine Lagarde and others start talking about Bretton Woods. and start talking about the Nixon shock and how money's changed previously, and then relating that to the kind of situation that we're in today. And then you see the convergence of distributed ledger technology sort of thrown into this whole mix. I do wonder what's the bigger picture here in regards to a change globally. We'll come on to the geopolitical aspect of everything, which was your third point, and this is probably going to lead us into it. It does very much to seem to me like this technology has came around at the perfect time, given the kind of geopolitical tensions that we have. And could these kind of unified distributed ledgers lead us onto a kind of one world? I hate to use that phrase, but I'm going to financial system. If you listen to Chris Larson from Ripple, and he's been doing this for a long time, he'll very much say that, look, DLTs are the kind of last piece of a globalist puzzle in regards to the world, because money right now isn't interchangeable globally. We have the dollar world reserve currency, and it's probably going to get propagated by stablecoins, but you can actually bring in distributed ledgers and kind of enable this world where you don't need to have the United States as the trusted entity. You can trust these globally decentralized ledgers and kind of enable a financial world. I know you write and talk about this stuff. Do you think we're moving to a entirely new global financial system with perhaps crypto as the underlying rails? Maybe that's a bit too far.
Yes, I do, but with a difference. I do believe we're heading into an entirely new system of global rails, many of which will use blockchain technology of some sort or another. I don't think there'll be public ledgers, unfortunately, although public ledgers are global anyways, and they will be used anyways by people who want to, because who's going to stop us, right? But global finance, as the institutions understand it, is not going to trust the public nature of open networks. They're going to have their own networks. I do believe we'll see global use of this technology, but fragmented. Now, there's a way to come at this that ties in what we were just talking about a moment ago, the balance between monetary and fiscal policy, and the geopolitical shifts as well. And this, again, coming back to stablecoins for a second, and there's a comment on CBDC, remind me about that. Coming back to stablecoins for a second, we also know that there is the policy afoot, a big strategy, big picture strategy in the administration to extend dependence on the dollar. But stablecoins are a fascinating way to go about that. And Scott Bessent has talked about how he expects everyone in the world to be using dollar stablecoins, and well, that's an exaggeration. Let's take him at his word and let's assume we are now in a world in which everyone is using dollar stablecoins. Well, what are these dollar stablecoins replacing? They're probably replacing, well, volatile currencies, but more importantly and relevantly, they're replacing the dollars that used to be held, the fiat dollars, the euro dollars or the Asia dollars or whatever. But let's say China has dollars, right? Now, China swaps out, or China's traders swap out the dollars for dollar-based stable coins that are backed by treasuries held in the United States. So in a way, we're seeing a flow of control of the dollars from the global holders of dollars back to the United States, because that's where the custodians are for the treasuries that back the reserves for the stable coins, whereas China's traders still have exposure to dollars, just not the old style dollars in which the dollars were actually living in their accounts. That's now in the United States. It's a type of repatriation, if you will, of dollar influence, while making them so convenient that more people around the world are using them. I think it's actually kind of ingenious. Now, on CBDCs, they are, well, in my opinion, not going to work, but they are going to be a reaction from governments around the world against this. The fear that the convenience of dollar-based stablecoins are so great, and of course everyone's going to be using them. Whereas using, I don't know, Naira or rupees or whatever is not quite as convenient, because they're not as liquid, they're not as widely accepted, and they don't easily plug into these new digital markets with digitized trade invoices, etc., that are springing up. And we're seeing this in Europe. Our politicians, especially our central bankers here, are flailing, trying to convince us all that we really need to not use American payment platforms for our own good. It's for our own safety. They have our interests at heart here. And what we really want, apparently, we're told, is a central bank, a euro CBDC, the digital euro. This is insane. We don't need it. We're very happy with our visas or our bank apps, even. But no, the central bankers are very uncomfortable with the dominance of the United States platforms here without asking why there are no pan-European equivalents. The answer is regulation. But again, that's a whole separate conversation. CBDCs are being tried around the world. I personally think that we will end up perhaps having one or two major ones that will be used. Unfortunately, I'm coming around again to thinking that maybe here in Europe we will get one, and wholesale CBDC for the euro would be great news. China is going to be successful in theirs one way or another, and all the others, they're not that necessary, because who's going to want to hold the digital naira, for instance? That ties into geopolitics, because if we are using the digital dollars in the forms of private stablecoins, or the digital yuan in the form of the government-backed CBDC there, then we are beholden to these powers. And while we have the choice of using one or the other, what if we happen to fall on the wrong side of authorities? What if, nightmare scenario, we fall on the wrong side of both by not choosing one or the other, and we get cut off from the various systems? So that's why I think we will get a patchboard of systems, patchwork, was that the word? Patchwork of systems that can connect to each other, because that's one of the brilliant aspects of blockchain-based technologies. They may be different, they may work differently, but they can connect, and the flows will go through various bridges and convertibility issues, etc. But it will be a lot less clunky than the system, and a lot less centralized than the system we have today.
Yeah, there is something, a disruption of the kind of global monetary order of things as it is. We got the opportunity to speak to a number of European central bankers. The digital euro, which Christine Lagarde, there was that radio show that she was on, she very much said, look, we want to move away from Visa, MasterCard, American companies, and embed our own thing for economic growth. And the answer, of course, is the digital euro, which is their CBDC, which actually doesn't run. This is one of the biggest misnomers in crypto is that the digital euro, their CBDC digital euro, runs on distributed ledger technology. Central banks has told us directly it doesn't use distributed ledgers. What does is the kind of wholesale aspect of their CBDC. That, of course, does, which I think is very interesting. And it's not just, we talk about adoption. If you look at what America's doing, there's going to be a pushback from that. The Reserve Bank of Australia, for example, with Project Acacia, are actively looking at their own alternative. And I think you've got this kind of crypto arms race that America seems to be at the front of, that's taking place as a real driver. And that's kind of geopolitical. Your third point was about geopolitics, and this being a kind of driver for crypto, being both sort of puffed up by the macro, but also driving it. How do you see geopolitical events beyond perhaps stablecoins and the use of this technology in this race driving crypto adoption broadly?
Resilience. It comes down to resilience. I mentioned the possibility of somehow pissing off both the United States and China and being cut off from the two most important financial systems in the world. And again, I'm projecting here because China is still new, but they are working very hard on internationalizing the yuan. It is one of their priorities for the 5-year plan. So, but let's say you get cut off from both. Well, you're going to need an alternative. And whatever type of distributed system you're using, it does give you some resilience, especially if you can convince trading partners to take your stable coin or digital currency or accept theirs or whatever. In other words, resilience. You're not dependent as you are today on the dollar system. And one of the most disturbing trends I've seen recently in terms of the geopolitics of finance has been the increasing use of weaponization of the dollar system. I mean, anyone who reads detective novels or thrillers, like I love thrillers, will know that the more you abuse the control, the more people will find a way around it when there is an incentive to do so. And that's what we're seeing. We know that Russia is getting ready to launch their CBDC. They brought forward the launch date precisely because they've been cut off from the dollar system. And guess what? Once they've launched it, and once the war in Ukraine is over and Russia is allowed back into global trading, they're not giving up their system. It's going to give them a resilience they may need again in the future. So that is one of the reasons that crypto is now marching into the geopolitical sphere. Resilience in terms of payment systems, but then also you've got resilience in terms of reserves. The gold price rise over the past year has been eye-watering. I haven't checked the price this week, but last I looked, over the past year, it was up something like 70%. I've not seen anything like that, whereas Bitcoin was down slightly. Again, in Congress for sure, but one of the reasons the gold price has been climbing is the steady accumulation, because it's not really speculative yet, the steady accumulation from institutions around the world. Now, why would they want to? For a lot of them, it's de-dollarizing. And if you're going to de-dollarize, you really have to ask yourself, well, what else is there? I don't necessarily want to hold the yuan or the ruble or the rupee, but gold is something that I'll be able to convert into anything else. And then there's also just the inflation hedges, etc., etc. But the thing about gold, as we have seen through some of the logistical issues they've had, is that if you're going to hold it in the basement of the Federal Reserve of New York, well, it's not really yours, is it? Say you get into trouble with the United States one day, well, that gold, as we have seen with what happened to Russia, suddenly not necessarily yours. That's one of the reasons there's so much gold flying around above our heads as we speak. It is being repatriated at great expense. It then has to be stored at great expense, etc., etc. Now, what if there was a digital equivalent where you can just take custody in the question of minutes? And this is something that is not yet a feature of reserve accumulation, largely because of awareness, largely because in times of stress, you're not going to bother to learn something new. And gold is gold, always has been. It's not something you necessarily have to convince your constituents is a good idea. But Bitcoin, there's a lot of convincing to be done yet, but it does make sense. It's digital. Central banks holding Bitcoin in their reserves not only have a hard asset equivalent, not related to the dollar, that can plug into the digital economy anytime you need it.
Yeah, it's a totally new paradigm shift, and I think that is something we're really yet to see in any major scale. I mean, I know we have Bitcoin reserves, the kind of strategic reserve. I know people are a little bit disappointed with that in regards to it's just what's been seized and held. I actually did see something floating around in regards to Venezuela's Bitcoin holdings, and it was apparently Venezuela holds quite a lot of Bitcoin. In fact, it's right up
Well,
there in terms of the amount.
what have you heard on that? I've heard a couple of rumors, but nothing concrete. What
I
have you
think it
heard?
was something. None of this was confirmed. It's floating around on X, so you've always got to be very careful when you see things floating around on X. But it had Venezuela as one of the top Bitcoin holders. Now, I'm not quite convinced of that, but that would be certainly interesting. Certainly, given what's happened, we seem to live in very strange times, and I just wonder. Talking about geopolitical events driving crypto adoption, if you're uncertain around your jurisdiction, Bitcoin kind of acts as that island that you can transport onto, I guess. And I think that's real driver. So I'm not 100% sure on the Venezuela thing. I don't really want to get into that because I'm not sure how verified it is, but there was a rumor. We do know, of course, the United States and Venezuela, there's a situation going on there. 2026 already started off with a bang. Just the other day,
Yeah.
Jerome Powell actually came out and spoke about what was going on between him and the White House. What do you think about that?
Astonishing. I mean, just
Yeah.
absolutely jaw-droppingly astonishing. Like on Sunday night when he came out, I mean, I saw this on Monday morning, obviously. It was shocking, and I like to think of myself as unshockable these days, especially after what we've all gone through
Yep.
together over the past 10 years. But yeah, I was actually shocked. I didn't think that the assault on Fed independence would be that blatant. But a lot has come out over the past couple of days that have shed a lot of nuance on that situation. Turns out President Trump didn't know it was going down. So this isn't a Trump instigated action, at least not directly. Obviously, it was assumed he would approve, but it definitely didn't come from him. It came from Janine Pirro, the district attorney for Washington, D.C. And according to reports, she did not let her bosses at the DOJ know that she was going to do this. She didn't give a heads up to Treasury. Treasury Secretary Scott Bessent is furious, and he has told President Trump what damage this could do to the market. And of course, Trump has his hands tied. He can't ask her to walk it back because he doesn't want to seem as if he's supporting Powell. And so it's a really tricky situation for the White House here. But the vibe that I've been getting over the communications over the past 24 hours is that they're trying to dampen the importance of this. They can't walk it back, but they're trying to downplay it, as in, didn't really come from us, but there's not much we can do about it. And then if you look into the details of what the subpoena is asking for, they're asking for information on some statement, confirmation of some of the statements that Chair Powell gave the Congress on costs of the refurbishment, on cost overruns. And apparently they resorted to the subpoena because the Fed was unresponsive to their traditional format requests, emails, etc. Now, this jives with reputation the Fed has for being astonishingly unresponsive. I've heard so many people in DC and even in New York say that they send requests for information, legal requests for information that the Fed by law has to supply, and the Fed ignores them, which speaks to a worrying trend in the Federal Reserve that I've been sort of noticing but not really paying attention to until this week, and that is the lack of accountability. They do not feel they have to answer questions because what are you going to do, right? Although the law is clear in the term in which they have to answer legal requests, they're not complying. But again, what are you going to do, right? So silver linings, optimism and all that. I like to look for silver linings. There's a very big silver lining here. The assault on the Fed's independence, I think that will blow over. I don't think that's really going to be a thing. And as we sort of touched on earlier, I don't think the Fed is that independent anyway. And anyhow, it is becoming less and less relevant. So we don't want to jolt in global investors and U.S. policy, but the U.S. does also have the advantage that it has very liquid markets that can hold it to account. If it thinks that the government is spending too much, yields will go up, and that will stop the government from spending too much because they can't afford to have, et cetera, et cetera. So going back to this, there is a silver lining here, and that is we do need to discuss the culture at the Fed. We need to discuss the accountability of an unelected body that has considerable power over people's lives. The Fed has made many mistakes over the years. It has not had to answer any questions about them. And, you can even make a strong argument about how the Fed is very much behind one of the drivers of this increasingly K-shaped economy. There's absolutely no reason why the US payment system should be so much more archaic than the one we have here in Europe, of all places. So again, I think this is actually going to end up being a positive development in that we need to talk about the Fed.
Yeah, absolutely. And I think conversations lead to solutions, lead to at least a better future, even if they're tough conversations to have. You mentioned the K-shaped economy there. Now, crypto being macro, just to set the stage, we were kind of very bullish on the markets from kind of 2023 onwards. Generally, when I say markets, I mean the kind of US equity market, crypto as a whole. And I think with the value of hindsight looking back, it very much seems like, okay, directionally markets have done well, but it's been in this kind of hollow manner. It's been in a kind of CapEx, AI, tech sector, top 10% of earners. It's not just been a K-shaped market, it's been a K-shaped economy sort of fashion. And I think for somebody like myself that looks at opportunity in the altcoin sector, it's been frustrating for us because we've definitely been in the bottom half of the K. I think Bitcoin's gone up with the top half of the K around the kind of narrative, obviously the BlackRock filings, the ETF, so on and so forth. It's done very well as a result of all of that. Do you think we've been in a K-shaped economy? Is that your broad take? And I think the follow-on question for that has got to be, where do we go from here?
The answer to the first part, yes, definitely. I mean, every single data point you look at points to the K-shaped economy, and it totally explains why you have all of these consumer surveys delivering very bleak results, but the market keeps going up and the economy is doing just fine. So yeah, those that get by paycheck to paycheck are really struggling, and this is very much masked by the positive news that trots across our screens every single day about how much, how happy the markets are and the money that's pouring into the United States, and President Trump reminding us that everything is just great. So yeah, K-shaped economy in so many ways as well. I mean, one of the income prospects, employment prospects, also just general mood, that's an issue because got into so many arguments with people about the relevance of consumer surveys. That is soft data. No one pays any attention. No, people pay attention to them. And if you're not paying attention to them, you really are missing the entire bottom rung of the economy. It's important to know what they feel. Even the Fed, even Jerome Powell is explaining why he pays attention to inflation expectations. It may have nothing to do with inflation itself, but it's certainly going to influence them. And if inflation expectations become unanchored, then that's a very bad sign about what's ahead. So the K-shaped economy definitely probably going to get worse as well, because it is not being acknowledged, because there's a general denial that there's massive affordability issues. We are starting to hear affordability creep even into President Trump's speech, and we're going to hear a lot more of that as the midterms approach, because it is the number one concern on many voters' minds. Affordability, inflation, the polls will tell you that. But it's there are no measures afoot that I am aware of to actually address it. A dividend from tariffs isn't going to do that. What would do that? Open access to markets, make markets more accessible, make the payment system work more efficiently. These are two ways in which crypto can obviously help. And others are, again, just make markets fairer. And I'm going to step back and tell you a little story about why I fell in love with this industry back in 2014 when I came across Bitcoin. I started out in TradFi, and then I set up an e-commerce company, ran that for 13 years. I just sold my company, and I was sitting in my parents' living room on a rainy January, just figuring out what's my next career going to be? And I was trying to catch up on what had been happening in the world in my absence. And I came across Bitcoin, watched a video, got goosebumps. I got goosebumps for two reasons. One, because I grew up in Zambia, and just thinking about what permissionless payments could do in that part of the world, geopolitically, sort of, again, blew my mind. But then I did some research. I realized, okay, perhaps barriers, boundaries, banking system's not ready for that yet. Then when I realized what I was looking at was a new type of marketplace, that's when I knew that this is what I wanted to do, just, for the rest of my life, just focus on the marketplace aspect of it, because markets are a distribution tool for savings and opportunity. They should be a tool for freedom for everyone in the world to not only get funding for what you need, but also get returns on your savings. And we can acknowledge that they sort of became for the rich after a while. Yes, anyone can buy shares, but the rich have better information, they have better access, and they get wealthier, in part because they have access to opportunities us mere mortals don't have. Crypto is a leveler for all of that. Bitcoin is to date, the only new technology, well, now Bitcoin and all the other crypto assets, the only new technology that anyone can get in early days on anywhere in the world, whoever you are, whether you're a shoemaker in the outskirts of Nairobi or whether you're a millionaire in the Bahamas, you have the same opportunity to buy Bitcoin. You can't say that with pretty much any other asset. So for me, crypto is a markets leveler, and that's one of the reasons I care very much about what you and I do.
I think also, not just in regards to a kind of alternative store of value, if you look at financial services with the DeFi sector, that can be brought to everybody now. And certainly, we talk about that K-shaped economy, the bottom half of the K can really, at least the bottom half for now, whether it catches up and Main Street. I know Besant's spoken a lot about how 2026 is the year for Main Street. It really can sort of level that playing field, as it were. 2026 has been off to a bang already. I'm curious, what sort of things are you looking out for this year? I mean, we spoke about the Clarity Act Thursday, tomorrow, I believe that's going to at least get some sort of a voting on. What things perhaps it could be that as a big catalyst? I think that is going to be a catalyst, but more broadly, this year, what are you really paying attention to and expecting to see in regards to the cryptocurrency space?
Well, again, we have to separate Bitcoin from crypto here, because I don't think Clarity is going to move much of anything, even if it goes through. I mean, I'm fervently hoping it does, because it's a big deal. But banking lobbies, government shutdown at the end of the month, there's just so much that can go wrong. So I'm reluctant to get my hopes up. A little bit getting hopes up, I guess, but reluctant there. So even if they make it through the committees, they make it through the markups, again, not a done deal. So I don't expect it to move prices very much. It'll obviously reason for celebration. Catalysts I'm looking for, I have seen over the past year, again, a lot of catalysts didn't make the slightest difference to Bitcoin's price. Never seen such tailwinds for Bitcoin, and yet the price has done nothing. So my expectations for catalyst is actually very minimal at the moment. Uh, Once the sell wall has worked, once the rotation from the old holders, the new holders has done its thing, and once all of those who bought at 110, 120 and are just fed up and want to get out, once they hit break even, once they're out as well, then we'll just start to see, I think, movements from fundamentals, from people accumulating longer term positions now that there's some movement, especially with geopolitics, no doubt, becoming even more chaotic in coming months. In some no clear catalyst, market structure forces will do their thing as they always do. The price will start to move and then we'll start to get momentum. We have to also remember that because there are no fundamentals here, crypto is a very momentum driven market. When it starts to move, it continues to move until it stops and turns down. I mean, again, we've seen all of that before. This time is different, but market forces are cyclical. So catalysts, those that would move it up, no. Catalysts that move it down, I guess there are more. Stock market downturn would drag crypto down with it. I mean, when you have to sell whatever, crypto is the asset that trades 24/7, and also it's easier to sell fast, so it tends to be dumped soon. That's often corrected when it hits a floor, but on the downside, yeah, their market downturn would be a clear catalyst that crypto's in for some choppy times. On the upside, I think it's just market structural forces and time. So does that make this a good time to get in? Not investment advice. It depends on how much lower you expect it to go. It could drop another 10, 20% maybe, or it could go up 50. We just don't know. It's all a question of timing. That's one of the reasons I'm not a trader, and not a day goes by I'm not glad I'm not a trader. Long-term holder, don't sweat the small stuff.
Yeah, I think the saying that timing the markets often beats timing the markets, certainly in regards to a technology that has a trajectory like this, rings true when it comes to the cryptocurrency space. You know, we've dabbled in sort of trading crypto, and often it's been to our own detriment. We've done far better from just recognizing that something might change the world over a longer trajectory. Noelle, it has been an absolute pleasure to have you on the show. Tell people where they can find you. We're going to leave links to everything in the description, guys. So once Noelle's directed you where to go, do go and check the description. Noelle, where can people go and find yourself?
Thank you so much, Ruby. It's been so much fun talking to you. Seriously, I can't believe the time
Likewise.
is flown by. You can find me on X at Noelle in Madrid, which is where I live. The newsletter I write is Crypto is Macro Now. Do give it a subscribe if you're interested in how crypto is impacting the broader world in which we live, or on LinkedIn. Feel free to reach out to me there.
That's it from us, ladies and gentlemen. Make sure you go and check those links in the description. Noelle, somebody that I personally follow. Thank you very much, everyone, for watching, and we'll see you all in the next All in Crypto podcast.